2021 taught us many things about the market. For many, it was the first time they'd ever seen a short squeeze. And of course, that was in part due to AMC and the GameStop saga. The question now becomes, do we have three short squeezes that could be occurring simultaneously in the markets right now? In today's video, we talk about the S&P 500 and what we expect into this week's earning and trillion-dollar options expiration, what's going on with yields, why the Fed keeps injecting money into the markets while they claim they're not, and of course, what's happening on the shiny metal gold. Do we have the stats that break down what happens next? Well, it turns out we have a lot to talk about, so join us now as we cover stocks, commodities, and cryptos together. Well, welcome back everyone to the Daily Show where we talk about markets around the world, and it was a sea of green for Monday with 50% of people kind of being surveyed as bearish and 50% as bullish. Turns out the markets went pretty much to the green side and they may be coming off that green into a bit of red as we talk about it later on today's video. But let's discuss this, history in the making. S&P 500, 7 companies will almost make up 30%, and we're about to witness that with the Magnificent Seven. It's hard to believe that the other 493 companies only make up 70% of the market, but, you know, that's what we're seeing right now. Breadth is small in these markets, and it's obviously something that we've seen worrying times ahead generally, as the last time we kind of got to these types of market conditions happened before things like the tech bust. Let's talk about New York Stock Exchange margin depth growth, though, because that's gone from negative 25 all the way back to a flat line. Now, there are some interesting stats in today's video where we've tended to see a pretty long-term movement after we see these types of reads. As you can see here, history doesn't really lie in what tends to happen next. And while there are some pullbacks and ebbs and flows in markets, it often marks a pretty bullish period for the moving forward stock market and of course stocks in general. What about short squeezes though? Well, here's where things get really interesting. It turns out that a lot of the largest traders around the world managed money were in net positions of shorts for gold futures. What did we just see on Friday? An over 3% move to the upside, which is pretty rare when it comes to these markets. Could this be an epic short squeeze? The last time we saw these types of switches occurred, we saw a rally of 30%, 32%, and 26%. Now, that's not to say it's going to happen every single time. Of course, we don't have that many data points, but it certainly looks like someone got squeezed and there are probably a bunch of shorts that are opened right now that could be looking quite negative. Speaking of other things we need to be concerned about, what about this breadth? We just mentioned 7 companies are making up almost 30% of the S&P 500. Well, it turns out that when we get overperformance of the big caps versus the small caps, which we are seeing at the moment, we increase our likelihood of going into a recession or going into a tough time of markets. And we've already been discussing this, that 2024 might be the period where we see a recession. And we've got a great indicator later on today's video that usually tells you when you're a certain amount of months away from that being called. Let's speak about a couple of months, because you might think, well, that means that the market should go down. Well, again, history would tell you that this week is generally a bullish week. Why? Because in 40 years, 30 have been up and only 10 have been down. We're in trillion-dollar option expiration week, and that means that, of course, this is the one that usually has one of those bigger bullish runs with it. In fact, it's almost 0.7, or it's almost 1% positive correlation over the last 40 years. Some other things that happen in terms of big years and the NASDAQ is that we usually see a pretty good strength here from this period in October all the way through to December. We've shown this in many different data stats over the last couple of videos, but of course, this is one of the reads that you can pause here. Here's a turn that tends to happen in October. And then, of course, here is the stat when we have a very bullish start of the year. We usually go 12-0 in terms of bullish runs into the end. Now, does that mean there's no recession coming? It doesn't mean that at all. In fact, we can still rally for multiple months. Everything all looks good. And then suddenly it all goes bad. It all comes down to timing, and timing will be everything. And of course, keeping an open mind to the situations right now. Speaking of open minds, can you believe this chart? We shared this over on our Twitter X account, links in the description down below if you want to follow along. And it shows you here that stocks have not caught up to the profit upgrades that, according to Wall Street, are happening right now. Forward projections for US earnings are rising again, and the stock market's actually underneath the projection forward. Now, when you tend to see these kind of underneath periods, unless they're really downgrading off, you usually look to catch them or even go ahead of them. You can see what happened here in 2020, 2021. And while we don't necessarily go with analyst upgrades or downgrades, it's an interesting stat nonetheless. Another one is Bullish percent index, which we shared over on our Twitter X account. You can see that increased on the Monday trade. Again, starting to show us that maybe we've got a bit of a bull market on our hands for possibly the next couple of months. But what it'll come down to is really earnings. Earnings will matter at the end of the day. Tesla after the close on Wednesday and Netflix kick it off. A lot of people expect Netflix to kind of drop and Tesla to really be reporting on tough margin conditions. If they do and markets go bad, then we'll need to be looking at some key levels. And of course, we'll have those set and we'll talk about them later in today's video. We've also got earnings release implied movements, obviously expected to be huge. Netflix is plus minus 8% move on the day and Tesla is plus minus 7. Please be aware of the risks going into this earnings season. Let's now take a look at some of the large transactions that were occurring recently. First up, we've got here Google, a big one coming in, 6.5 million shares sold or bought at this location, and it does look to be like a temporary sell locational area. That's in line also with some maybe weakness coming through on the Russell Top 200 Growth ETF, two dark pool transactions, transacting right where you would usually expect maybe a seller to come in, and the same thing happened on the ProShares Ultra Short Qs, which is SQQQ. Now, we saw some large transactions that marked in selling. We expected Friday that there was a large profit transaction, and now we're back down to an important level. So I think for sellers, if they're going to come back in, this is the time for them to shine. If they don't manage to sell it off in the next couple of sessions, then more than likely bulls will continue to control this week and obviously push through with that statistic we talked about before. What about unusual trade activity with options? Well, we're still seeing a lot of trades going on, especially around the Russell 2000 ETF. You can see here more puts, almost 2x puts to one call. And then we also had massive transactions, again, more puts going through on the SPY, 1.05 times 90-day volume. So generally up on that. Moderna was another one that keeps selling, 6.5% down, 1.75 times average volume, and 25.40 for Hilton. So this is a new one that's come back into the list. There were also some big trades on treasuries, and that continues to be one between the bulls and the bears with some large transactions occurring through both. In terms of overall options activity, it was a slow Monday, 33 million coming off a monster bumper. Expect Wednesday, Thursday, and Friday this week to be a massive options trade day, usually probably even a way more than the average daily trade volume, specifically Thursday and Friday. And Thursday is usually actually the more volatile day. 49% calls, 51% puts, so still very even in terms of both ends in terms of what's going on here in the markets. Let's move over now to what is going on in the charts. First up, our indication of recession is starting to get still closer and closer together. Now, again, recession, the word is a bit overblown, so it doesn't necessarily mean everything's going to go bad, but generally markets will have a little bit of weakness after a recession gets called, and around 6 months later, we tend to see that recovery period. And this could mark an interesting period for 2024. I kind of expect it to be up, down, and all around, and not necessarily as smooth sailing as this year has been so far for the bulls, with only two minor kind of pullbacks in comparison to what we saw in 2022. Expect this to go under 1%, that then to give us a timing on the rest of the market. What about percentage of stocks above 200-day averages? Well, we're still seeing that pretty low, 34.51%. Then we move over here to percentage of stocks above 50-day average. You can see there are quite a lot of recovery stocks going on here, 29.65 coming off a base of 15.96, which we assumed was probably a capitulation sell on this market in this particular parameter. And the percentage of stocks above the 20 continues to improve. So basically, this is kind of starting to mark, a pretty significant recovery. And if we go above 55.68, generally we're in the low has been formed. We know that's the base. And at that point, not that many times does the market continuously sell. Usually it means there's more bulls to come and we go into possibly that October, November, December Christmas rally at the same point. What about treasuries? Well, a lot of people are saying, the bottom's in for this. Some people are saying there's more to come. I would kind of go with we've got the structure that kind of marks the beginning of a potential turn. Now, because we saw so much selling, it's going to take time. And as I've often said, and we've talked about together on the channel, we may not have found the base easily. Like it takes time to base something like this off. So we might start to see a Wyckoff accumulation here with all the tricks and traps, and we'll obviously be following along, but volume is massive. So if we do see a Wyckoff accumulation, that'll hit the third law, and we'll talk about that should it occur. Treasuries, again, at a point where I could see buyers coming back in. What about copper? Even with the support of China into the stimulus packages, we're not seeing copper really find much strength in terms of ground. We are looking for this to break through probably around a 3.8 to really show us it's got more legs in it. At this stage, it just kind of seems to be weakening overall. So copper still showing weakness. Dow Jones Transportation Average Index held the low. Big deal for this. Massive recovery, almost took a new high, very significant in terms of the overall strength there. Home build is also showing us some recovery. That's good to see if you're a bull in these markets. Again, you don't want new lows. Set alerts for both of those to be new lows. And if they happen and the market's starting to look a little bit dreary and scary, then you could be starting to get a little bit more terrified as a bull and very excited as a bear. Let's move over to the US dollar. This could still be in what we call distribution or a topping pattern. We don't know yet. A lot of people are probably now speculating it's a head and shoulders with left shoulder, head, and right shoulder kind of forming here, and that's the neckline. I would just say that it came to a very critical point, and if we do see the squeezing on gold, traditionally that's kind of topped off dollar as well. So maybe dollar has found kind of a very key point for it. And I would say that I'm completely neutralized on dollar. Even though the trend has been up, I'm not going to remain too much bullishness in this market at this stage. I would say that that was a super TP for a lot of people out there, including some big fund managers. Let's move over to gold. Now, this was the squeeze of Friday, and we just mentioned before that when we see these types of squeezes off a net short position, it turns bullish. There's somebody that got really stuck, and they often get squeezed out. Now, we've had similar times when we've got these mass injections into gold, and what often happens is there's a bit of a lull straight after it. Everyone talks about gold very quickly. Everyone's quick to go bullish, and then we usually need a bit of a pullback or a slowdown to shake out the weak hands. Now, remember, the weak hands is a concept that used to be talked about a lot in 2021, diamond hands and the weak hands. Well, in this case, it's kind of similar. It's not just a day or a week or anything like that. If that stat is to come true, then generally speaking, you'd want to break things like this downward trend line. You'd obviously want to see a little bit of a pullback into strength. And in general, it was the weekly close that I think was such a significant portion here for gold. It closed right on its high, fully squeezed into the end. And I think that someone most likely got margined off that position. We've also talked about gold miners versus gold the spot. And we see again here some pretty decent strength coming out of gold stocks. US oil, what's going on there? It's come back. It almost hit our perfect level, which was basically $88.50 to kind of $99 or $90, I mean. And this is all supply. So do we expect sellers to come back through here? The answer is quite simply yes, we kind of do. If they do manage to sell it off, then we're looking for a new low, and that could also mark a kind of demand destruction across the board. So oil is super important to watch. Most people are probably bullish on oil. At my case, I think what we talked about was this was significant, I believe, for yields still moving forward. And if it does manage to hold shorts here and move to the downside, I do think that's going to be very significant when we talk about US 20, US 10, US 2-year yields and where they're at. Basically, we're seeing maybe a slowdown in the economy, and that to put a little bit more of a relaxation on this fear of the unknown that we're sitting out with yields. Tesla, all eyes will be on this. It's going to be a big one. We talked about it on our Monday Open, which we do every Monday, so make sure to subscribe to the channel, set alerts, and you'll get alerts for our Monday live streams here. But it kind of got underneath 250 during the open. You can see here, and then instantly rebalanced itself up. I think this one's just going to be all about earnings. I'm not sure which way it's going to go yet. I've kind of said 250 is like a good line in the sand for the bulls to make sure that they're happy at this level. If I was saying the higher timeframes, I'd say that shorters were present here and they're trying to short it down. So, small timeframers are going to just try to support 250. Larger timeframers are going to say, well, I'm already short and I'm looking towards margins getting crushed. I don't know about that yet. And I think a lot of us would be guessing. As we often do say, it's better to generally wait for the news result and then react to it not necessarily predict it. So I think Tesla, make sure to subscribe. We'll have some big notes on that as we move forward through the week. Everyone's talking about this, and Nvidia, head and shoulders again, distribution again. Do we see new highs on it? I'm not really too interested in the chart overall. I think something like Apple is more interesting, but I do think that we're going to continuously go into more of a holding pattern for Nvidia. Go back and have a look at the history of 2020 to 2021. You'll see that Nvidia held while the rest of the market was actually quite strong. It knows how to do this. It runs first, and then it sits there and does nothing for a while. Let's move over to Apple. Now, Apple found some recovery. Again, I was looking for a little bit more weakness here. I fully expect it kind of to come like that, is the concept I was thinking. And at this stage, AAPL was only down 0.07 on the day. So I'd like to see a little bit more weakness, maybe into like a 174 number, and then we'll see whether we can find some strength. Utilities continues its rebound, one of our favorite sectors at the moment, even though it was absolutely horrendous before that. And Google, we need to focus on this chart because as we mentioned before, could it be seeing sellers? This is exactly where sellers are going to come back in if they are present in this particular pair, and you would expect them to basically have a go at it at this level or zone. So what are you looking for? Well, I would say if you close below this blue line that I just moved, then it would be further weakness and maybe even a new low here. But at this stage, there are decent signs to say that there's a seller somewhere here in Google, and that's that large transaction that came through / you can see, look at the volumes, mass volume there at the end. So someone either took profit or they've actually placed a sell position. They're looking at, really seeing that thing weaken. What about the US 2000? Well, this might be the most interesting chart. We actually took that level that we mentioned in the live stream on Monday, and that's kind of bullish. Again, I expect weakness into possible strength here from the idea of the US 2000. So we've got like a really big sell-off. Obviously, then we've got further selling. A lot of sellers would have come in around here a little bit early, trying to get even further sell-off pressure. That hasn't happened, and it's gone to the bullish side. We can see the close here for the daily was quite strong. So I'm kind of thinking weakness into strength would be pretty good here for the US 2000. And at this stage, that's like the more likelihood across quite a few of these pairs. Let's go over to the Aussie 200. Again, weakness into strength looks pretty good. Actually looks fairly decent on the charts in terms of a strength area here for the Aussie market. So again, maybe some weakness, 1 or 2%, and then maybe that's going to be bid up. So if we do see weakness, I kind of expect bidders to come in. German market sitting around that buy zone, as we mentioned on the weekend video. We talked about how it was at a buy zone. This one did actually rally, though it was still not that great. I mean, it only rallied about 0.8% on the session. So highs above this 15,600, that's going to mean bulls are in control of this market. So mark that out, have that on alerts. We'll set it soon. Chinese market stabilized for now. Bunch of weekly bullish closes thanks to stimulus packaging and all of that type of stuff, but still not much momentum action. NASDAQ, again, has it found a level of selling. Well, you can see here the supply. You can see the zone that it's focused on. If the bulls manage to push through again, then we're just going to move to a new high and probably squeeze for a little while. But at this stage, I kind of expect weakness into strength. And it's the same thing again through the S&P 500. Weakness into strength would be ideal, especially considering what happened. Now, I mentioned again, if we took this high, that was significant. And I do think this is a relatively good bullish turnaround for the S&P. And it kind of points towards, more accumulation in here. Freaks everyone out on Friday. Big rally through the Monday trade. Now we get a little bit more of a drop off on Tuesday. And then maybe the fact of the stocks is better than we think. And Tesla comes out good, Netflix comes out good or whatever, or better than expected. And it moves towards the upside. So far, earnings is meeting expectations. I wouldn't say it's failing overall. Let's move over to the beginning of maximum pain week. So obviously the first time we see this is we've got maximum pain sitting at 431, which is currently underneath the 436 that we're at. So we did have maximum pain at a much higher level. Now it's dropped to 431. If we do see sell-off, expect puts to come through. What at the moment we do know is that 440 and 420 probably hold price this week. And that's at least the speculation that we've got so far. We've got a lot of 440 calls and puts, And then we have tons of puts and calls sitting on 420. So they're the two main strikes. Sitting in between here would be Wall Street's best interest. And obviously that's something we are looking at on these charts. When we move back over, Bitcoin was the most interesting one. It was wild. I think this was like a fake announcement of a Bitcoin ETF. But basically, imagine if a Bitcoin ETF does come out, and if that's the type of excitement the market's going to do. If you were sitting with a short, though, around 30K, we've long speculated a real bear would sit at 29.5. We've said this for weeks straight to 30K. This was super little instant short that came through. So yeah, fake news or not, who knows, but certainly a significant level. For the bears to really gain control, they're going to still want to push it underneath 26,000, 26.5 though. If you're not getting underneath there, the trend is still intact towards the bull side, and that's how we're seeing crypto at this kind of time and place. In terms of news for the week ahead, do remember there's a little bit of news coming through. In general, the main news is earnings itself, but then we have Fed Chair Powell Thursday, October 19th, he's talking, and that's going to be a big thing and a big event. So again, it's always big when Fed Chair Powell comes out. He might say something that freaks the market out. 12 p.m. New York time. Make sure to stay on top of that one. And then the other thing that I wanted to mention was retail sales. So that's going to come out Tuesday. We've got core retail sales and retail sales. And that's sure to show us a little bit more about the American consumer, which is a huge part of course, America and the overall health. If the consumer is weak, the markets may not like that either. Thanks so much, guys. Make sure to subscribe, smash that like button. Sorry about the lateness of today's video, but we'll be back to normal schedule after this. Thanks so much. Bye for now.